Good morning. You're watching Business World Live. I'm Danie Laurel. It's 10:30 a.m. this Thursday morning here in Manila. We are about 1 hour into the shortened trading day. Let's kick off with our top story. Remittances recorded its biggest drop in almost 2 decades in the month of April. That's as many OFWs lost their jobs because of the COVID-19 pandemic. You can see on your screens here, cash remittances coursed through banks shrank by 16.2% to $2.04 billion during that month from a year earlier. That's according to the Bangko Sentral. This is the widest drop since the recorded contraction of 33.5% in January of 2001. Remittances in the first 4 months fell 3% to $9.45 billion. The Bangko Sentral attributed the slump to the repatriation of OFWs from countries that were heavily hit by the pandemic, as well as the closure or limited hours of local and overseas banks during the lockdown. Data from the DFA showed that about 82,000 Filipinos have been repatriated from about 62 countries and 132 cruise ships. Union Bank Chief Economist Carlo Asuncion says remittances could have dropped further in May, where lockdown measures were the most stringent. AM economist John Paulo Rivera said the remittance drop would hit households that use money for basic needs and notes that they may have to rely on government subsidies to finance their consumption until their income source is restored. BSP Governor Ben Diokno says remittance inflows may recover next year. That's depending on how fast countries can bounce back from the health crisis. Meanwhile, the Philippines' dollar reserves rose to a record in the month of June, that's supporting the peso amid volatility brought by the virus. Gross international reserves rose by 1/10 to $93.3 billion. Now let's open my Bloomberg terminal with me and take a quick check on the local unit. That is, of course, after that bleak remittance figure. No surprise here. Our peso weakening to the greenback, now trading at 49.553. Meanwhile, let's check in on another headline. This is, of course, an update on the COVID-19 situation. Metro Manila will remain under a more relaxed general community quarantine, or a GCQ, until July 31st. But Malacanang is not discounting the possibility that the capital may return to a more strict, modified, enhanced community quarantine. Presidential spokesperson Harry Roque says NCR may revert to MECQ, that's if cases continue to rise in the region in the next 2 weeks. Roque said President Duterte initially agreed to return the region to MECQ as proposed by University of the Philippines researchers, but changed his mind upon the appeal of National Task Force Against COVID Chief Implementer Carlito Galvez and Interior Secretary Eduardo Año. Roque says the appeal was based on the pledge of Metro Manila LGUs to intensify their tracing, testing, treatment, and lockdown measures. Metro Manila has been under a GCQ status for 6 weeks now. This means most businesses are allowed to remain open, but at limited capacities. COVID-19 infections have hit 58,850. That's after registering 1,392 new cases on July 15th. 11 new deaths brought the death toll to 1,614, while 517 new recoveries were recorded, bringing total recoveries to nearly 21,000. The Philippines has the second highest number of infections in Southeast Asia, next to Indonesia. Okay, kicking off the markets with a flurry of economic data. I'm going to pull that out for you. My chart here, that is, of course, China. China had this GDP figure for the second quarter coming in at just 10 o'clock this morning, and you can see on your screens here either the terminal or the graphics, particularly that it did beat the estimate. So it's 3.2% for the year-on-year GDP for the second quarter in China. That is compared to a survey that was conducted by Bloomberg, of course, which was actually at 2.4%. So again, better than expected. But you do have some other indicators here that still show some signs of worry. For example, retail sales. The survey was for it to actually increase in the month of June by 0.5%. But what did happen was that it contracted. So retail sales consumption contracting by 1.8% in China. Another shining spot, though, here is the jobless rate. So the survey was 5.9%, but in fact, it has tempered a little bit to the tune of 5.7%. So this, according to Bloomberg Economics, they've termed the fact that China may be on the rebound, but at a below average clip. But the thing to be watching out for here is that this actually happened after the GDP cratered by 6.8% in the previous period. So definitely still a recovery, but there is, as we mentioned, still weakness in the private and external demand. It might still be very well below the historical levels we've seen in China. Now, this print comes after, and I'm going to pull out for you the equities chart of the rest of the globe. This week, after we saw optimism, you can see on my terminal here how the US actually performed overnight, completely in the green. This was on the back of possible progress in developing a vaccine for the coronavirus. You had Moderna, which is at the forefront of developing this vaccine, surging to a record after they promised, they reported promising trial results. You've also got AstraZeneca rising on that. US stocks happened to climb the highest in more than a month. Apart from that, oil had also advanced, that traded above $40 per barrel. That's been trading above that level for some time now. And another positive thing on the geopolitical front, President Donald Trump had indicated to the aides that he does not want to further escalate the tensions with Beijing. He has ruled out additional sanctions on the top officials. Another thing to be watching out for in Europe, the ECB meets today on monetary policy, but no new policy announcements or rate changes are anticipated. Very quick peek, though, at Asia and how they're digesting all of these things, from the US geopolitical situation all the way into the China GDP figures. It does not seem like a lot of optimism, actually, especially if you take a look at the Hang Seng, which is down by 0.6%, and all the indices in China in the red. Now, let's take a quick peek at our own local boards and how we are faring, especially as we saw stocks dropping by the most in 1 month on hump day. That was yesterday. We can actually see it picking up a touch. So staying above water, above 6,000 levels here. We are opening up by 1.3%. That is a rally from what we saw yesterday, where we fell by 2.5%. That was the lowest since June 15, the lowest in 6 weeks. Apart from that, yesterday also saw us losing 1.6 billion pesos in an 8th straight day of withdrawal from our our foreign investors here. Now, what was causing this exodus? Now, some are saying that there are a lot of fears still on a possible, reversal of our situation in Metro Manila from a looser lockdown of GCQ, possibly back into more stringent MECQ. But apart from that, there's a specific factor that had broke the market, and this is from Astro Del Castillo of First Grade Finance. He said that it's the IPO of a REIT, so that is of course Ayala Land, that might be sapping away some liquidity. At least yesterday, many had actually decided to be safe and stay on the sides. You can see on your screens here what he is talking about, and that is of course the A REIT, which has now been priced. So they are expecting the final pricing to happen on July 22nd and the listing on the local stock exchange on August 13th. They're selling around 456.9 million shares at a price range from 25 pesos to 29 pesos and 50 centavos. And this is the dividend yield all the way up to 6.34%. Now, on the back of all of this news on the A-REIT coming in and the pricing, we actually saw the Ayala Land. So Ayala Land is, of course, the sponsor of this Ayala REIT, falling by as much as 4.5%. Now, according to Phil Stocks' financial Japheth Tantiangco, he did mention that some may actually be rebalancing their portfolios and selling off some of their property stocks to actually have cash buy into this REIT IPO. So some changing hands here happening, and you can see on my terminal here whether or not these property developers have finally rebounded, and you could actually see that the property index now up by 1.4%. That is being led by smaller players here. Let's take a peek at whether Ayala Land has recovered. It has. It's up by 1.7% after having fallen by 4.5%. In terms of the near-term outlook, the Philippine Exchange could actually break below 6,000 levels. That's according to Jonathan Ravelas. All eyes are still on the rising cases, eroding the consumer and business confidence, and of course that remittance print that we saw, which was the lowest in 2 decades. Now, speaking of consumption, I did want to highlight one stock which did just release its guidance, and that is Shaky. So that is, of course, under the ticker Pizza. They have mentioned that they're cutting their capex to 300 million pesos, and they're now expecting recovery to take 2 to 3 years. So they actually had an initial original budget, which was around 600 million pesos for 2020. They've cut it in half, and they've actually already spent most of that money in the first few months of the year. Now, they had said that they will be putting an end, or it's likely that this 16-year streak of double-digit growth will finally be ending this year. The worst is yet to come. The second quarter will be even more pain. And what they did mention, though, the recovery of their business is roughly around 55% of what they had been having pre-COVID. Now, finally, one other thing, sorry, there's a lot to be digesting today, but it is, of course, the start of earnings season. We've got the first bank coming out with their second quarter earnings, and that is BPI. You can see on your screens here, net income slumping in the second quarter by 25% year on year. That's to the tune of 5.29 billion pesos. And that brings your first half net income down by 15% year on year on the back of revenues actually increasing. So revenue still increasing by 15%. But what actually had happened, they had to put aside a lot of provisions. So they put out 4.3 times the amount of provisions that they had for those possible bad loans compared to last year. So they had to set aside 15 billion pesos for that. And that happened despite the fact, that they had loan growth at around 6% in that period, and also growth from all sectors. Corporates up by 8.4%, consumers up by 2.5%, and even non-interest income, so trading, up double digits by 20%. But again, as mentioned, a lot of money needed to be set aside. Their non-performing loans coverage ratio is now at 141% compared to less than 100% last year. And this for Metro Securities, this earnings was actually below their estimate, but still in line with consensus. And if you take a peek at the analyst coverage here on my terminal, you can actually see that more and more people are saying to hold BPI. Initially, there were actually more people in the buy camp, but you're still seeing a lot of people having faith in the stock with buys at 15 out of 22 analyst recommendations. So more markets later on in the broadcast. Okay, let's check in on the big stories to be watching out for this Thursday morning. The Philippine Economic Zone Authority, or PEZA, has approved 22 billion pesos worth of investments, which is expected to generate close to 9,000 jobs, more than half of which are already existing projects of locator companies. The bulk of approved investments were in Luzon, particularly in the Calabarzon region. These were mainly composed of export enterprises and IT companies. PEZA approved investments in the first 5 months of the year reached 29 billion pesos. That's 30% lower than the figure from the same period of last year. PEZA said delayed meetings due to lockdown measures imposed play a part in the decline in that number. PEZA Director General Ching Plaza said last week she was optimistic about investments for the rest of the year, but noted that foreign investors are still wary of the country's cost of doing business and its poor IT infrastructure. Now, only commercial scale barter will be subject to tax and must be registered with the government. That's what the Trade Department clarified on Wednesday. Trade Secretary Mon Lopez said that barter made through whatever channels needs to be registered when such activity becomes a regular business. Barter businesses with annual gross sales of over 3 million pesos are subject to VAT. Lopez said on Tuesday that the department will be closely monitoring barter exchanges, noting that it is illegal in most parts of the country except in some areas in Mindanao. Lopez told reporters that the DTI may set rules for online barter should it be necessary. He added that the department will continue to monitor barter transactions among individuals if it is sustained over time. The ADB signed a $10 million investment agreement with private equity fund Navigar 2, which is focused on investing in mid-cap companies here in the Philippines. Through Navigar 2, ADB said they will help provide growth capital to businesses operating in critical sectors. In a statement, ADB explained that the $200 million fund will invest primarily in healthcare, education, business services, logistics, and consumer goods and services. ADB Director for Private Sector Investment Funds, Janet Hall, said Navigar 2 will support operations of businesses under such sectors and help them adopt new technology to adjust their business models to the new normal. The multilateral lender also noted that it wants to encourage the development of private equity as an asset class here in the Philippines. Manila-based private equity firm Navigar manages both Navigar Funds 1 and 2 with total assets of around $300 million under management. It's safe to say the workplace has transformed, and was once seen as a temporary contingency solution has turned into the status quo as many countries, including the Philippines, experience a resurgence of the COVID-19 cases after relaxing restrictions. Now, here to give us a bird's eye view of how COVID-19 has changed the game and the crucial steps businesses must do to not only survive but thrive, we have with us on the line Rachel Barger, President for Southeast Asia of SAP. She is live from Singapore. Good morning, Rachel. Thank you for joining us.
Thank you for having me. So nice to be on today.
Rachel, today is actually the third day of the Forward Together 2020. So it's a virtual event hosted by SAP. You guys, in a nutshell, it's a very big company. You're doing around 70% of the world's transactions right now. You've done a survey, particularly in Southeast Asia and smaller businesses, wherein the main result is just 1% of those surveyed expect business as usual after this pandemic. But then only 6 out of 10 are actually taking steps to make changes. Give us more insight on this particular survey.
Absolutely. And what's so exciting about this survey is that we surveyed over 4,500 business leaders across the ASEAN bloc as part of the registration for this conference. So really recent data. And as you said, despite everything that's happening out there, people are waiting and seeing. Over 40% of companies are saying that, I'm not quite ready yet to take any action. I'm going to wait and see what's going to happen. And I think what's even more interesting is in the Filipino market, it's over 50%. So we saw a pretty significant deviation from the rest of the ASEAN bloc. Over 50% of Filipino businesses are taking a wait and see attitude. And the thing that I'd say about that is I know it's human behavior to, when you see something unfolding, when something's uncomfortable, to step back and want to take a moment to step back. But at SAP, we've had the opportunity to work with thousands of organizations over a very long period of time across the globe. And we've taken a look at some of the previous downturns and how some companies really thrived and how others certainly did not. And one of those thriving behaviors is actually taking the opportunity to innovate and transform, to take the opportunity to really survey the landscape and quickly, with agility and flexibility, step forward and take advantage of market opportunities that exist. We all have to reset for the rebound. We have to do things that allow us to be more efficient in our operations, that allow us to get closer to our customer. Because as you know from the survey, over 60% of us are saying that we're seeing significant variations and changes in our customers' buying behaviors. If we're seeing that, we have to listen, we have to act. And then, most importantly, it's not just about getting an order from a customer. It's not just about promising them a service. It's actually about delivering the service in the way that they expect. So it's not just about front of office. We also have to have our back office, our operations, our shop floors. They have to be ready for what's next.
Thanks for that, Rachel. Now, let's just go deeper into this fact, because a lot have been saying that the trends that we are seeing now, working remotely, beefing up investments in cybersecurity, digitalization banks, for instance, and e-commerce. These were all trends that had been existing prior to COVID. And these were things that businesses had already been investing in. And now it's just simply accelerated these trends. So do you think that, it's just a matter of businesses, implementing things that they had already been doing, or is there a bigger disruption that really needs to happen? Has something, dramatically changed the plans before COVID?
Yes, I think there have been some real dramatic shifts. I think if we look at the disruptions of supply chains, for example, you don't have access to the same suppliers that you did in the past. You can't necessarily count on the supplier you used yesterday for a critical part still being available, still having employees that can work on the line, still being able to send it to you at the timeline you expect. So you have to build a new resiliency in that you really had not probably thought about before. You may have been thinking a lot about cost optimization, reducing inventories, things like that. But now we have to be more agile and flexible. It doesn't mean that we're not going to take strategies to reduce inventories, but it does mean that we need to be able to swap and change. And we have to be able to plan and predict before we act, so we don't just jump to conclusions. And I think that's something that's really critical. I'd also say customers' buying patterns, as we said before, they're changing. So you have to find ways to listen to them. And one of the ways that we think is extraordinary is by using our SAP Qualtrics solution. Great example, a company like FoodPanda, after every delivery, an SAP Qualtrics survey is sent to the customer. So that's an example of a business that's taking customer feedback at every interaction and then trying to incorporate it back into their processes so they can stay at the front of mind, and they can also be ready for market deviations so they can take first advantage. And I'd also say there are opportunities as well to listen to your employees. We're all working from home now. It's really changed the way that we work. It's changed work-life balance. We need new tools to be able to work from home the appropriate way. We may need new skills to be able to perform our jobs the right way. If we neglect our employees, if we don't listen to our employees and find out how we can equip them to be best engaged and have the right tools to do the right job for right now, that's when we're going to find true success as an organization.
Rachel, you mentioned that the Philippines in particular has been slow to act. What is the number one thing that needs to happen? What's the low-hanging fruit that needs to change? And is this, you mentioned people are just averse to change? Is it specific to the fact that we have 99.6% MSMEs here? Is it specific to funding? What is going on here? Why are we worse off than the rest?
Yeah, I think one of the things I'd think about is that if I could leave you with 2 words, or the audience with 2 words to think about, it would be innovate and transform. And like you brought up with SMEs, some might think that, hey, this is only for the large conglomerates, but there are a couple of things that I'd say. First, you can start small. A great example is an organization like Bangkok Glass. They identified some very manual processes that were taking a lot of time from their employees, and actually preventing them from doing more value-add work. So they applied intelligent technologies like robotic process automation to take care of that process very quickly, significantly reduce the manual work. Not only are employees more efficient, they're happier because they're not having to shuffle as much. It's also about being omni-channel, and it's about being digital with your customers. Are you on the right channel where your customers want to buy from you? And it's a great opportunity. So many SMEs are going to have first customer interactions during this time. If they take the jump to digital, if they make themselves available, if they can be found. And then I'd follow up with that. It's not just enough to be found. It's not just enough to engage with the customer at the front end in a really engaging way. You actually have to keep the promise that you've made. And I think that's one thing that we see sometimes be a blind spot, especially in the SME space, is watching the entire process through to completion. When we make a promise, we have to keep the promise. We have to deliver the right good or service at the right time as the customer expected, especially when you're having that initial customer interaction. They're going to make a snap judgment about you. How are you prepared to have them talk about you in a really amazing way instead of saying, oh, I don't think I'm going to try that organization again? So those are a couple of ways to think about how everybody can jump in. It doesn't have to be this massive transformation. You can innovate and transform even in really simple ways that make a really big impact.
Okay, so it's more about agility rather than just spending for automation and these processes. I wanted to ask, from your perspective or SAP, what is it going to be looking like in the future? When you say recovery, it might take anywhere from 1 to 5 years. In a good scenario here, what is that recovery going to be looking like? What's the world going to be looking like? What are businesses going to be looking like? And do smaller businesses actually have an advantage here, especially since the drawing board, everyone's starting from zero again, and there's so much chance to, as you mentioned, innovate.
Absolutely. So I really do think it is a reset for a rebound, as we said before, and it's going to happen sooner rather than later. You were talking about the ADB earlier, and I think there's a really interesting ADB study that just recently was released that's saying that, for example, in the Filipino economy, they're expecting a negative growth, a contraction of 3.8% this year.
Mm-hmm.
However, next year, they're expecting growth of 6.5%. And I think that's what's really important, is that we all have to understand we still have to consume. We still have to buy things.
Right.
We still have to keep moving forward. And those who are sitting back and waiting and seeing are going to struggle to survive and to thrive. Those that are getting on the front foot, taking advantage of the opportunity, scanning the market to try to find what opportunities exist for them to innovate and transform their businesses to take advantage of these new market opportunities. That's what we really hope to inspire people about, and that's really what our conference has been all about. How do we inspire everyone, whether it's a small, medium enterprise or whether it's the largest conglomerate? If you take action, if you plan before you take action, if you predict, if you have intelligent technologies to help your business to operate at scale, to reduce inefficiencies, then you're going to be better positioned to reset for the rebound.
Rachel, one last question before we let you go, especially in the Philippines, when you're talking about small and medium-sized enterprises, what are the most exciting sectors or opportunities wherein they can actually pivot? We saw during the pandemic a lot of companies, changing manufacturing into hospital or medical type goods. A lot are now restaurants doing deliveries, and e-commerce has been there. What other spaces are very exciting for you, and won't these spaces eventually get crowded out?
Yeah, so I think what you said earlier about are SMEs more adaptable and agile to take advantage of these opportunities, I think it's a really good point. And one of the things that we really focus on at SAP, we work across 25 industries all across the globe, and we work really deep with those industries around business process and innovation. But one of the things that we're most proud about is how we try to transfer, say, innovation from manufacturing and transition that into retail, or from retail into banking, to technology. And I think a great example of that is a concept like digital twin. So how do you operate a piece of machinery or understand a situation in a digital way so you don't have to be right on top of the machine? How can you use that digital twin to predict? And you can use that in a manufacturing context with machinery, but you can also use it with a consumer context, like a stadium. How do you predict how individuals are going to come through the stadium? How do you orient them to go to the right concessionaires? So I think if you keep your mind open, if you take the opportunity to make innovation and transformation part of your business, not just an afterthought or a side project, you're really setting yourself up for success. And those businesses that are focusing on building agility and flexibility, they're going to be ready for those market shocks, and they're going to be better equipped to make the right decisions at the right time and take advantage, because the opportunity is out there.
Okay, thank you so much for those insights. That is very interesting, and hopefully we see a stark improvement in the ways that smaller businesses are actually coping with the new normal and equipping themselves, as you mentioned, in terms of innovation. Thank you so much. That was, of course, Rachel Barger, President for Southeast Asia of SAP, joining us from Singapore.
Thank you so much. Have a great day.
Have a great day. Okay, guys, one quick peek on the markets. I'm trying to open my terminal with you. I'm seeing whether that screen is actually being shared here. very, very quickly. I'm going to have to add that back to the stream just 1 second. But nevertheless, I did want to check in on a couple of stocks here in particular. These are, of course, those that are still mandating banks in terms of fundraising. So a lot of money still and liquidity needed for a lot of these companies. One in particular is Double Dragon. I'm going to pull that out for you. They have mandated banks for a dollar bond sale. So joining the ranks of companies like PLDT. You've also got, for example, Jollibee, which had also expressed interest for offshore borrowing. They've mandated Credit Suisse and PNB rather Capital to help arrange a series of investor meetings. So this might actually happen. They are, however, warning that it will be dependent on the market conditions. This after them having said that they will be continuing with their planned REIT. So after, we had reported Ayala Land pricing that, or at least giving the target pricing that REIT by July 22, you've got Double Dragon targeting 17 billion pesos in terms of proceeds for that REIT. But as you can see in my terminal here, it's not necessarily doing much for the stock, which is down by 0.2%. Another one that is seeking to raise money is SM Investments. I'll pull that out for you. That is SMIC. They're seeking the sale of 15 billion pesos worth of bonds. Let's try and pull that out. That's SMPM, and they are actually filing that with the SEC. That was already 30 billion pesos worth of bonds that it will be selling in 3 different years. So that will be part of their debt program. The initial amount of bonds to be sold is 10 billion with an over allotment of 5 billion. They have actually received a PRS AAA rating, so that's the highest grade. SMIC up by 2% at 929 pesos and 50 centavos. Very quick peek on our local index here. Before we end the broadcast, we are still maintaining ourselves above 6,000 here. We are rallying by 1.4%, bucking the sell-off in the rest of the Asian Pacific region, trading at 6,099.03. And that's a first look into the business day. Today is July 16, 2020. Catch us again tomorrow morning, 10:30 a.m. I'm Danie Laurel, and we are One News.